Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock. With news over this weekend, there were some major releases from the US. First, the Fed released its semi-annual monetary policy report. Although it got almost no wider media coverage, it does point to some very interesting stresses that they're going to have to work their way through. And they are issues that could have global consequences. Secondly, total US consumer credit surged by almost $41 billion in December, far exceeding the forecasted $12 billion increase. In fact, it was the largest increase in the history of this metric. And third, the US January non-farm payrolls growth came in less than expected, up 144,000, when the average market estimates were 170,000. In 2024, that would have been regarded as a big miss. And fourth, the University of Michigan Consumer Sentiment Survey for February fell from January, and quite sharply. It's the second straight month of retreat. In addition, inflation expectations for the year ahead soared to 4.3%, the highest since November 2023, from 3.3%. This is only the fifth time in 14 years we've seen such a large one-month rise in year-ahead inflation expectations. Many consumers appear worried that high inflation will return within the next year. And it's not going to get better. Trump is signalling reciprocal tariffs on many countries, also expected to raise costs for Americans. It'll be a major international escalation if he does that. But north of the border, Canada turned in a very strong jobs report again, its second consecutive big gain. 76,000 new jobs were added in January, far higher than the 25,000 expected. And Japan is reporting that household spending jumped in December, and by very much more than anticipated. It was up 2.7% in December from November, when only a 0.5% rise was anticipated. And India cut its policy rate by 25 basis points to 6.25%, its first cut since April 2020. They are juicing up the stimulus, with this rate cut part of a two-part action to complement last week's income tax cuts. In China, their January CPI inflation is meandering close to zero, although it picked up to 0.5% from a year ago in this latest update. China's producer prices remain deflationary, down 2.3% year on year. The US Treasury 10-year yield is now at 4.50%, up 5 basis points from Saturday at this time. And the price of gold will start today at $2,860 an ounce, and a little change from Saturday. Oil prices a little change too, at just on $71 a barrel in the US, while the international Brent price is still at $74.50 a barrel. And the Kiwi dollar is now at 56.6 US cents, and up 10 basis points from Saturday. Against the Aussie, we're unchanged at 90.2 Australian cents. Against the euro, we're also unchanged at just under 54.8 euro cents. That all means our trade-weighted index starts today at just on 66.9, and the same as Saturday, but down 30 basis points from a week ago. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.